listed real estate company Growthpoint Properties says it remains focused on maintaining a strong balance sheet and liquidity to enable offshore expansion. The company will also look to invest more in the Western Cape, where there is a growing demand but a lack of quality office assets. The group has an additional 1.8 billion rand of investment commitments into the 2024 financial year. SABC News Markets presenter Nastassia Arendse spoke to Group CEO Norbert Sasse for more.
Every year we're saying this is the toughest year that we've had, and then a year later we make the same kind of comment. So it's the operating environment with the load shedding, that commenced, I guess, towards the back end of last year, and I guess is continuing even today. Has created an enormous pressure within the business. From the financial perspective, with interest rates having increased to the extent that they have over the last year, it's had a meaningful impact on our income statement and the total charge for interest, in the income statement. So we set out, I think, at the beginning of the year and made a comment, prediction to the market that we deliver some growth. I think we call it muted growth. We've come up with 1.3% growth on last year's numbers, both in dividend per share and distributable income per share. And considering the backdrop, of the weak economy, the global uncertainty, global interest rates, and load shedding, I think it's a pretty decent outcome, to be honest.
When you look at the different sectors that you've got exposure to, where are you seeing a light at the end of the tunnel, given this backdrop that you've just described that is tough?
Look, I think, thank goodness for the level of diversification that we have, right? I mean, we've got the South African exposure across retail, office and industrial. Then we have the standout actually in the domestic market, which is the V&A waterfront in Cape Town. We then have Eastern Europe, the UK and Australia. And given that mix and diversification, even within those different markets, again, we diversified across office and industrial type assets and mixed use at the waterfront, including residential. I think the strength of the performance lies, I guess, in its diverse nature of the portfolio. So undoubtedly, the shining light is the waterfront down in Cape Town had a spectacular year. We continue to see, good growth numbers coming out of the waterfront. And more domestically, I think the distinction to be drawn is between what we call the inland portfolio, or let's call it more broadly the greater Gauteng and Pretoria, let's say Gauteng, Johannesburg, Pretoria areas, versus the Western Cape portfolio and the KwaZulu-Natal portfolio. Again, the coastal regions doing relatively well, in fact, particularly well, but Gauteng struggling across all the sectors. Less so in retail and industrial. Office continues to be a big challenge in the Gauteng region, and more particular in the sort of Sandton area. Yeah. So, yeah. Again, internationally, Aussie did well. All the international assets actually contributed, quite nicely. But, the big challenge being the interest rates.
Talk to me about the impact this decision by NSFAS to cap the residential allowances on student accommodation. What's the impact? And then also, are there plans to reduce exposure to that NSFAS side by perhaps even repositioning when it comes to student accommodation in the short term? What does it look like?
Yeah, good question. Look, I mean, certainly it came out of the blue. It was a bit of a shock to the system. I mean, especially so short after we actually entered that market. We only invested in that portfolio about a year and a half ago now. And so it's definitely had a very meaningful impact, especially on our income statement, on the revenue generation side of the portfolio that is based in Pretoria. To a lesser extent, the UJ and portfolio, but Pretoria quite heavily impacted. Now, for us specifically, this particular year, in June 23, we were not impacted in as much as we had let's call it a rent guarantee from the vendors who sold us that portfolio. but that rent guarantee has expired, and next year we will be taking the full brunt of any negative impact of NSFAS. So, look, the team are very actively engaging across multiple fronts to try and find a solution, to try and resolve some of the impasse, but also, at an operational level, looking at these individual assets and reconfiguring them in a way to increase our revenues by, changing some of the bed configuration, the room configuration. There are some things that you can do to try and increase the revenue from these assets in the absence of finding a solution on the NSFAS front. But it certainly is posing a challenge. We would strategically, I guess, be looking not to get out of the sector at all. We think there's still a lot of legs in the sector. It's a very exciting sector with great growth prospects, but somehow we need to mitigate, I guess, our risk on the exposure to NSFAS.
The one line item that stood out for me in your results was that in terms of leadership, you have agreed to stay on with Growthpoint until 2026. Give me some context here and perhaps let us in on the room. Were you considering at the time perhaps to step away a little bit? How did this conversation come about that you would stay on until 2026?
Yeah, I think the main issue is more of a personal nature. I have, my family. My son is about to finish school, and we were thinking of, his future at university and where that might be. It did include potentially looking at, offshore destinations. But I think as things progressed, it became evident that, he would be staying domestically. And, the board and myself entered into discussions around me potentially staying on. It's fair to say that there's a lot going on in the business. There's strategically a number of our strategic initiatives, are in progress, but there's still a lot to do.